Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. We have a full packed action 20 minutes of action here for you guys, talking about all the intro and outros for this market today. All right, guys, let's get right into it here. Let's go right into the charts or the data points. Let's start out with our market blast. Apple iPhone sales collapsed 25% or 24% in the first weeks of 2024. The chart has broken key supports, and I've talked about this prior. We're going to look at the chart today, but you have broken major key technical levels here just in the last couple days. The stock is down another $4 today. There might be a buying opportunity coming into play, and I'm going to go over that. SMCI was up as much as 27% yesterday. Crazy move just because it was added to the S&P 500. For those of you out there that are new to investing, that is not normal. That is a momentum kind of chase for return. And again, if you looked at Decker Outdoor Living, that was also added to the S&P 500. You know how much it was up? 2.5%. So again, 27% at its highs. It ended up closing only up about 16%. It's down $30 last I checked. Be careful, guys. These are the types of things that if you don't know what the market is doing and you don't know what is normal, you get caught in these type of momentum situations. Think about people that were buying SMCI over $1,100 yesterday. And again, right now it's trading below 1050. Potentially it's even going lower. Pre-market, it got as low as 1009 in the morning session. All right, next up, we also talk about this, right? In addition, late day selling crushed Super Micro from 1155. That was the high yesterday to close at 1075. Technically a very weak close. Now, why is it a weak close? Because the previous high a few weeks ago was 1077. And interestingly enough, and this is so important, I was just talking to the traders on my trading floor, how when you have a stock that goes above a previous major high, it's so imperative that it holds above that high on a closing basis. When it fails and it closes below, that is not good. Now, what do I mean by here? Well, again, 1077. That was your previous high. It closed at 1075, and this happened right in the last 20 minutes of the day where it was trading at around 1130, got crushed all the way down to 1075. And again, folks, that is not random. That is not random. That's institutional sell signals galore. They did not want to let price yesterday close above this level. This would have been bullish. Now this is net bearish per the charts, and I look at it like this. The big institutions, it's a signal to the other institutions. Game time up. Let's go down. Let's short this thing. Let's get this thing back in. We'll see if that's correct, but watch that. That is not arbitrary. That is not random. That in the last 30 minutes of the day, 20 minutes of the day, it dumped out literally $50+ to close just below, literally $2 below where the previous high was. All right, couple other things here, guys. Bitcoin kissed its all-time highs at 69,000. It hasn't broken yet. We're going to look at that chart in just a minute. Yes, I am still short for those of you out there, so be aware of that. MicroStrategy early pre-market was down $100. It's come back a little bit as Bitcoin has bounced off of the overnight lows. But again, this stock has run from 450 to 1350. Be careful again, guys. It's a great move. Amazing. Michael Saylor, great guy. All of that stuff. But again, that is a monster move on the charts. Couple other things to go over here real quick. If we take a look, we have the Federal Reserve, right? So again, let's take a look here. The Federal Reserve here, presidents are talking more and more about no need to cut rates. The market right now doesn't care about that. There will be a point where the market does not like the fact that the Fed is not ready to cut rates. Again, this is key. Bostic yesterday, one of the Fed presidents, came out and said, hey, what's the point of cutting? There's no reason to cut. Stocks are at all-time highs. The economy is doing just fine. The jobs market is doing just fine. These are the things that the Fed's seeing. By the way, the Fed's watching crypto too. They're also seeing Bitcoin getting up to all-time highs. They're seeing these runs. That doesn't make you want to make liquidity easier to access, okay? When you have these type of bubbles brewing, it does not make the Fed say, oh, let's cut rates so that money's even more free, because it will just inflate the bubble. All right, next up, what do we have here? ADP private sector data coming out at 8:15 tomorrow. I'm covering this right now because this is key, guys. Tomorrow, by the time I do my stream, by the time the game plan goes, we'll already have this number out. It's expected to be at 150,000 versus last month at 107. Now, again, just taking a quick look here, guys, at the chart of ADP. We can see that, again, this is going back to 2021. We had one pop of ADP. Since then, it's been generally trending to the downside. So, again, this was your last number down here at 107. We have to watch this. Right now, you can argue that there's a lot of economic data that has been weak, but the jobs are staying here. Jobless claims are low. Unemployment stays low. We're seeing government jobs continue to be added, and it's keeping the market afloat. If we start to see a crack here, this could be a bigger deal. All right, lastly, guys, Target reported earnings this morning and revenue. Earnings and revenue beat. Forward guidance was solid. The stock is doing very well today. We'll take a look at the chart. All right, let's get into those charts right away here, guys. We're going to start out with the spiders, which, again, very important for me to look at, right? So we noticed yesterday we touched the high end of this wedge pattern, which just gets tighter and tighter and tighter. At some point, this breaks. One of the keys, and I showed you guys this yesterday, remember, when you have a wedge pattern, right? Here's a wedge pattern. When you hit a few times and break, it's like a small break. And that could be to the upside too, right? Let's say you go, here's small break. When you stay within the wedge pattern for a long period of time and break, the move is going to be bigger. So what you expect here is that whichever way this breaks, it's going to be a big move. It's either going to be a final rally to the upside of epic proportion, or it's going to be a big drop in the markets. My guess is if it drops, you probably are looking at a 10% correction in the markets. Now, in the scheme of things, is that big? No, it's not that big of a move, but a 10% correction in this market, we have not seen that type of drop, would feel like a huge drop to many, many people. And it would likely see the big mega caps continue to correct. All right, speaking of mega caps, guys, look at Apple here. I'm going to zoom out because I want to show you a couple lines here. Look at these dual levels that have been broken. All right, there were two trend lines, one of them going back all the way to 2020's lows here on Apple. You can see it all the way back here. We then cut it right through here, and we have broken that line. Here was a smaller one, shorter one. Either way, both have been broken as of yesterday's close. And check this out, guys. Apple is now trading in the pre-market even lower here. Let me bring up my real-time quotes here. Take a look at 170.88 all the way down here. Now, there is a technical level I'll be eyeing today around 170 or a pierce of 170, but again, it is just a short-term trade. The next thing I'm going to do for you guys is show you where I am looking for a bigger opportunity for a swing trade. So remember, if you're looking at the 10-minute chart, generally it's day trading, right? When you go to your bigger time frames, your time horizon widens. So daily chart for me is swing trading. If I'm going for a longer term investment, I don't do much of that. Weekly and monthly charts are what I'm looking at. The one thing to look here, right? So if you look at this, we have a down sloping trend line here, and we have a little pivot point in here. I just want to show you guys this real quick on the charts. So what we'll do here real quick, and again, just getting my lines in order. Bear with me here. All right. And if we take this line here and we drag it down, what are we getting to, right? So look at that line right there. This line from this pivot top right here, right? Right here, right here. And again, right down to about 155 to 156 area, give or take. Then there's a secondary level, right? And I always look for the confluence, right? If you want to be a good investor, you have to look for more than one level at the same price point. All right, generally 3 is the magic number. You get 3 factors at one price point, the odds of success are 70 to 80%. That's what I found. All right, if you get one line, 60%, maybe 65%. It's better than 50-50, but it's not unbelievable. So look at this. If we put a line right in this area right here, and we drag it right across, look at what we get. So now we have this line, this to this point, right? It cuts right through here, and it gives us this area here. And then we have this pivot top with that one, and it comes right in the same zone. So right now, that to me, this 156-ish level, give or take, is my zone for where if we see Apple continue to flush. And by the way, trading at 170 now, you're only talking about $14 of downside further to get into a level where then I would start to expect a major bounce. Now, again, that would be a big fall on Apple, so we'll have to keep an eye on it. Interestingly enough, it would have taken out well. And by the way, it's not that far from the low from last October when the markets made the low. But remember, the markets are at all-time highs up here. So Apple has been a huge, huge underperformer in the short term. Next up, we talked about SMCI. I just want to show this to you guys again. I do think it's worth noting. So one of the things I watch for is where you close. When you have a big day like we had yesterday, where do we close? And essentially what you can see here is you have this huge reversal, right? This was an epic reversal that dumped out from 1077 all the way down. We got back in the $700 range down here, okay? We then have rallied all the way back. On S&P Edition News, they got added to the S&P. It closed here at 1074, right? And if you draw that trend line, it was just below that high pivot. Those are things that I look for as a technician to give me an edge. Now, does it mean it's going to be right? No, it doesn't mean it's going to be right. But ultimately, it does give me just a little insight into what the mentality is of the big money. And big money's controlling all of this, right? I mean, big money is controlling all of this. Important to understand that. MicroStrategies. MicroStrategies, incredible move. Just again from this low here, from about $425 to $1,300 and change. Incredible move. It is down a little bit this morning last I checked. We'll see what it does. Most importantly to me, you have a double top, which basically mimics the Bitcoin double top. So essentially what you're trading here is Bitcoin. If you do MicroStrategy, again, it is Bitcoin. It's a Bitcoin proxy. All right, couple other charts here. I do want to just mention, guys, that I did take a short on Coinbase today, or actually it was yesterday that I picked it up just above this 230 level. The concept behind this is just purely technical. And again, everyone gets so emotional about crypto. It's like, oh my gosh, I can't believe it, this or that. It's like, dude, it's not emotional. It's literally, I just follow a rule book that gives me these levels. And if it works, it works. If it doesn't, it doesn't. My goal is to just have about 70% to 80% work, and then the other ones don't. So be it. Maybe my Bitcoin trade doesn't work. We'll find out. I don't use leverage, so I got lots of maneuverability there. But again, same thing here, right? You look at this area here. To me, this speaks a ton of resistance. There's a ton of chop here. That tells me that there should be a lot of resistance right up in this 230 to 235 level, right? So again, that's something I'm watching. You also have a confluence of levels. Remember, multiple trend lines converging. Take this, connect it to that, and what do you get? You get that same level on Coinbase. All right, so again, we'll see if the trade works out. Again, 1% of my portfolio, and that's my swing trade portfolio. It's not a huge deal either way. Here's your chart of Target, guys. Let's bring up our real-time quotes on Target. Target's having a nice move to the upside. We can see it right here, trading around 165. I want to point something out on this. You guys know I've talked to you guys about charts trading at the lows versus the highs. It's not a general rule that is always in place, but if you look at the chart on Target and we flip out, right, if we zoom out on this, what we can see is that Target in general was trading a lot higher over here, right? A lot higher, and it had been pounded down. And so the fact that it's trading back up here on earnings, I mean, yes, it had a run up, but it's not like the Walmart chart. And I always look at these as two charts that generally they can diverge for a period of time, but eventually they come back into play because in general they are what they are, right? They're two companies that are somewhat aligned. And if you flip over to the Walmart chart, look at the Walmart chart. It's just up and to the right, right? All the way up there. And so Walmart's been continuing to make new all-time highs while Target was up here, and then it collapsed here, and it kind of came back here, and now it's trading up here, right? So the idea, again, being is if Walmart's doing well, yes, Target is a little different, but they're still known in the same group of companies, and again, you could see that Target coming back. Now, would I buy Target here? No, I'm not going to buy it up $15 on the day, 12%, whatever it's up, but again, it just shows you the divergence there and how things eventually come back to fruition. All right, let's jump back to center screen real quick, guys, here. So I just want to show you guys, we have started filling out this wheel here. All right, look at this. Kitco, all right, 10 ounces of silver in Bitcoin form. Again, people were like, oh, well, why are they doing a big... Dude, it's the coolest thing. These things are literally the size of my hand of silver, and it looks like a Bitcoin. It's the coolest freaking thing. When this spins, if it lands on that, that's what you win. All right, that's $250 essentially worth right there. All right, TradingView 1-year memberships. They donated 2 spots. That's literally, this is the premium. This is $600. You land on here, $600, $600 in value right there. NordVPN a year, Lux Algo 1-year premium, and again, Winning Trader Series. That's my donation here. That's $6,000 right there. We will be spinning this daily once I fill out. We still have a few spots left, 2, 3, 4, 5, 6 spots left to fill out on this wheel. But my goal again, folks, is that this is the wheel of appreciation. You guys support me. The comments are just incredible, and I thank you from the bottom of my heart for all of that. And again, my goal is every day I want you guys getting some value out of it. We're going to throw some crypto on here as well for those of you that you love your crypto. I'll spin it every day, and we'll see who can win every single day from our followers. All right, lastly, before we get back into the charts, guys, I just want to thank iTrust. iTrust is a sponsor here. We're still working with iTrust. Hopefully they can figure out something to donate on this wheel as well. But again, let's take a quick 30 seconds to thank iTrust.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back. So we have the Bitcoin chart up. Yesterday, we were right over that 65,000 level. We talked about, can it hold 65? It did. Now we're dealing with, guess what? The 69,000 level. Now, it hasn't pierced that yet. In general, you probably do see a little bit of a pierce. And listen, I want to be clear. Maybe in certain platforms or exchanges, it did pierce. But in general, from what I'm seeing, it hasn't quite pierced yet. Either way, the kicker is this. This is a double top. This is a big test. This is the biggest test for Bitcoin. Can it push through double top here? This is a level that I'm watching like a hawk per my short, obviously. And again, watching very closely to see if we close above and if we confirm. Confirmation is number one in my book. I'll show you how the oil trade actually didn't confirm, and now it's back below that level. We'll look at that in just 1 second. All right, call me a dummy. You can call me whatever you want, but I did short Dogecoin last night with members of Verified Investing Crypto. And again, the idea here was very simple. Number one, incredible move up. You basically have a time count to the upside. But secondly, what we can see here, guys, is that if we zoom out, there is a pivotal point of interest right here. I want to show you guys this level of the reasoning behind that short. All right, so again, if we look at this and we draw a trend line in, you can see right around this $20 level, there is major technical resistance. Look at this, guys, going all the way back to 2021, right in here, right in here, right in here, right in here, all through here. All right, guys, so again, that's going to be, at least according to me, a good level of a short. Now, yes, I am already up on this. I shorted it around 20 cents. It's back down to 18.5 cents. I'm looking for, honestly, these aren't, and understand this, guys, I'm a quick trader. I'm in and out, right? I'm like a stealth ninja, essentially getting in and getting out. Those of you that know me, those of you that follow me, you know that I'm a swing trader, right? So if this pulls back to like 17, 16 cents, I'm out. Then I don't care what it does. Do whatever it wants. Go to $20 even. Doesn't matter. It's all about my ins and outs and maneuvering, looking for buying support and selling or shorting resistance. All right, couple other charts here. I always like to go over with you guys a few extra charts. Let's take a look here at MTIC. MTIC has had a beautiful move up. Looks like we have taken out this former support level right here. So if we jump out to a bigger time frame, we have to start scouting out where your next levels are. All right, to do that, I'm going to go out to a wide view range. Couple things I'm seeing on this wide view range as I chart real time with you guys. All right, this would be kind of your maximum upside. This would be like bull best case scenario for MTIC in the near term. I want to show you guys this because this is kind of, again, by the way, do I think it's going to get up here? Not in the short term, I doubt, but nonetheless, look at all the confluence of levels right here, right? You have this pivot top right here. We have a sloping line right through here. All of them are kind of converging around 155 to 165. That would be your max upside. Now, you will run into some resistance. There's a little resistance coming in right in this range, right around 120. Do I have any interest in shorting this here? No. But if it got up here, would I short it? If in the next 2 days it rushed up to 155, 156, yeah, I'd short it. Sure. Just like, again, if this thing, by the way, if this thing pulled all the way back in a day or two here, I'd buy it. It's just that simple. It's nothing personal. People have such a emotional attachment to investments. I have never known anyone to really do well when they have emotional attachment to anything. All right, and again, it creates an unlogical type viewpoint, at least with investments. Listen, you want to be attached to your dog, your cat, your wife, your kids, of course, obviously. But when it comes to investments, investments are not going to love you back, so don't love them. That's my policy on investing. All right, next up, let's take a look at ETH. ETH is a rocket ship. What a move on ETH here. Take a look at this. I do have my next level, which is at 4,000, so don't be surprised if we get up to this 4,000 level on ETH. Right now, 37.78 on that Ethereum chart. Next up, we got to talk gold, guys. Gold, I've been telling you this was going to break out. That's what we call a breakout right there. That's a monster breakout. All right, now the kicker is this. I said there would be a little bit of resistance at this former little pivot high right here, and essentially we're very, very close. What I'm expecting here is us to tag or get close. We already got close to this level. You're going to do a little bull flag like that, maybe even pull back to this area. We'll have to see, and then the next leg should start to the upside. But this is case in point what's going on. And again, I was just literally last week saying buy Newmont Mining, buy GDX, buy all of these miners. Take a look at the GDX, guys. Look at this rocket ship to the upside in just the last couple days, basically over a 10% move on that GDX. Silver's also had a big move, although silver remains stuck. It is not breaking out on silver. Part of that is that it's more of an industrial metal. We can clearly see here, we have these high pivot here all the way down right here. It hit there, and then we have these lows down here as well, and it is pushing up towards the high end at 25, but it's got to get through 25 to really kickstart that breakout. Last couple charts I want to go over, guys. We're going to quickly look at uranium, the URNM. I don't do this very often, but I know I do have people out there that love their uranium. Sounds a little weird, but anyways, the point being is that this is your buy level, at least this is where I'm going to be looking to buy it. I'm a big longer-term bull on uranium. I just don't like paying up in price. So what I do is, number one, you can see why we're here at support, right? We're right there at support. This eventually probably breaks, and it comes down here. Pivot point right here, right through here, and you have this big upsloping trend line coming through all of these lows, right? And they converge around $36 to $37. That, if we can get a pullback there, I'm a big buyer on uranium, the URNM. And lastly, guys, quickly to oil. Talk about oil, guys. Oil broke out the previous day, but no confirmation. Reversed yesterday. Confirmation's now off the table. It's still below. It would need to close above again and break out and confirm to really get to that $85 price target. And lastly, guys, here we have the natural gas ETF. I did take I did exit natural gas yesterday. I told you guys that again we'd have a little bit of resistance right up in this range. We kissed this $2 to $2.05 level, and again I did exit that position yesterday. It was a pretty big position in my portfolio. Not to say it's not going to go higher, but basically what I'll just look for now is a little bullish consolidation, maybe back to 180, 185, and then buy for that next move to the upside. So again, it just shows you I'm a nimble trader, right? You know, there's trading where people hold for long periods. I'm much more of a shorter-term trader. All right, guys, so this is where we end here. If I can get that throwing through here, I got my ball back right here. As always, guys, you rock. Thank you so much for tuning in with me and spending time with me every single morning, Monday through Friday. I'm so glad you guys are learning so much. It means the world to me. You guys have a great one. And again, I'll take you out here. Take care.